Oh, good morning, everyone. Thanks for joining us today. We're really honored to have the Western Director of the Washington State Small Business Development Center, Steve Burke, joining us. And he's going to be providing quite a bit. He's going to do a presentation on the PPP loans, the EIDL, which are forgivable loans, and the EIDL grants, which are also called EIDL advances, and the shuttered venue operator grants. So Steve, I will let you take it from here. We also, of course, have Mike Rieckhoff, Rick Dickinson, Micah Jonet on with us, and a lot of other CPAs, accountants, and some Jason Gill from First Federal, who is very involved with their PPP loan application. So Steve, I'll let you take it.
All right. Can everybody see my screen all right?
Yes.
Okay, good. Thanks for having me, Colleen. Happy to do this. What I'm going to cover today is, as you mentioned, the Paycheck Protection Program, resulting from the new legislation, additional details on that, SBA and some tax provisions included in it, elements of the legislation specifically for underserved and low-income communities, and most current information. We'll talk a little bit about how and where, and then the SBA EIDL loan and where to seek additional assistance. So one of the things that that's really important is that while I and my colleague in this, Janie Sacco of the SBA and Mark Costello of the SBA, do a fair amount of research in studying the legislation, the interim final rules, the FAQs. We are not the final authority on this material. It's subject to change, as we know, at any time, and right now it's nearly daily with either new rules from the Treasury or the SBA. You've got to remember that there's really three government agencies all involved in taking congressional legislation and developing rules and interpreting it. That's the U.S. Treasury, the SBA, and the IRS. So we're still waiting for a lot of new information. One of the things that we tell people is that we are not CPAs, we're not attorneys, and we want to leave the professional tax and legal advice for small business owners to their particular professional so that they can interpret how this impacts their specific business. So our basis here is that we just do a lot of research to be able to get to the point where we're at with these. And one of the purposes of both this presentation and the legislation is to help some other technical assistance partners, which is many of you, some of those supporting bilingual and underserved communities, to interpret this for small businesses so that we can get some of those that have had barriers in the past over those and be able to benefit from this latest legislation. So some of the things, and those of you who are CPAs, I hope you will appreciate the fact that we deal with clients in my business at the SBDC and Mike and Rick and Micah, and the work that we do, we deal with people with very low financial literacy. So we are really encouraging people to understand and have completed their 2019 and on their way to completing their 2020 business tax returns, because it gives you it gives the business owner a much greater opportunity to be able to get through some of the barriers to obtaining some relief and or future lending. There is a calculation that you've got to make relative to funding for the new PPPs, relative to determining how much you would get based upon previous payroll. Other documents that you would need and should have and be maintaining and taking care of: bank account statements, third-party payroll records, W-2, W-3, tax forms that you may have on your employees, such as a 941, 940, copies of funds transfers, ACH things, bank transfers, exactly, checks, And then state wage, L&I, all of that supports what you're doing with your employees, as well as the additional employer portions for the health insurance, retirement plan, state and local taxes, payment receipts, canceled checks. And through this, evidence of gross revenue changes from 2019 to 2020, and we'll talk about that in a bit. So the first draw, PPP, business entities who did not receive PPP in 2020. Keep in mind that those, the first rounds, all the first rounds of PPP were over on August 8th in terms of being able to apply for a new one. And now you've got also the fact that for all of those who did receive a PPP loan in 2020, the reality is that everybody's covered periods ended at least on December 31st, and they should have used those funds. But first priority is going to go to first-time borrowers, including minority-owned, veteran-owned, women-owned, and business and underserved markets, and that's specifically stated in this legislation. You must show that you were in operation on or before February 15th, 2020. The maximum loan amount this time is $2 million. And not more than 500 employees per physical location, and that's for the first draw. Accommodations and food service can employ 500 per physical location, and they get a special allowance in the calculation. The actual loan amount is 2.5 times the average monthly payroll. It is 3.5 times the average monthly payroll for those with a NAICS code starting with 7.2, which includes accommodations and food services.
Hey, can I see your phone?
The PPP application program is extended to March 31st, and they've appropriated $284.45 billion for it. Don't know if that's going to be extended. Probably depends on the circumstances by the end of the first quarter. SBA portals opened this week for community financial institutions and minority depository institutions for first and second draw applications, but we are still pending dates for all other PPP borrowers and lenders. Eligibility for businesses that have used, so this is the second draw. I wanted to point that out. I view these as, I've got here 5 major changes that are critical relative to this new legislation that really kind of changed things and we think improved it. But eligibility for second draw is that you have to have used your first PPP loan funds. The legislation that says you have to have used it or intend to use it. Well, that's fine, but everybody's covered period ended at the end of December, which means you should have used it. There are some who haven't. We're not sure just how those are going to be treated, but they may wind up turning into loans for those that did not use it during the covered period of their first PPPs in 2020. You have to document, in order to be eligible for this second draw, you have to have documented a 25% reduction in gross revenue on an annual basis or in any one of the 4 quarters in 2020 as compared to 2019. So you can actually pick your basis on which to do this, which means more people will apply and be eligible, should apply and will be eligible. And that means that if you had a really bad second quarter of 2020 as compared to 2019, you should be able to meet this gross revenue reduction. So we're pretty pleased with that. As I mentioned, the loan amount is $2 million, and unlike the first draw, this one is limited to 300 employees. They're trying to narrow it down to smaller businesses. You're only allowed to get 1 second draw. And as I mentioned before, this amount of what you're eligible for applies, 2.5 times the monthly average payroll, but for NAICS codes 72, which is accommodation and food service, it's 3.5 times the average monthly payroll based on the calculation I just described. Eligible entities are for-profit businesses, certain nonprofits. They're now including 501c6s, which are EDCs and chambers of commerce, housing cooperatives, veterans organizations, tribal businesses, self-employed, sole proprietors, independent contractors, and small agricultural cooperatives. So they've increased eligibility for these, which is just great. Pleased with that. So the number 2 change is the simplified loan forgiveness. 89% of all of the 2020 PPPs were 150,000 or less of nationwide. And so we're going to see an improved short form. We believe it's going to be similar to the short form that was issued in the fourth quarter last year, allowing those with 50,000 or less to quickly apply for loan forgiveness. We believe that's going to be modified with some language in a new form that is not yet out that will allow loan forgiveness on a simplified basis for 150,000 and less. And all the borrower is going to have to do is attest to certain certifications that demonstrate compliance. The requirement, though, for use of PPP funds to get loan forgiveness is essentially the same. 60% of the use of PPP funds for payroll applies. 40% of funds can be applied to mortgage interest, rent, utility, and there's some additional costs that can be covered, including expenditures regarding property damage from civil unrest, supplier costs, and worker protection expenditures during the covered period.
Steve, can we pause right there and see if people have questions on this first section? I know I already have a couple. If I can pose a few to you, see if you have some.
And my only concern, Colleen, is being able to get through this in the time that we have. But sure,
Okay.
if you want to do that.
Just real quick then. So have they defined what the underserved markets are?
No, they have not.
Okay. And can you use either when you're looking at the quarter, comparing a quarter in 2019 to a quarter in 2020, can you use cash or accrual? If you use cash for each quarter and that gets you the 25%, but the accrual didn't, does that work?
There isn't specific guidance on that, but what we understand from the legislation is it really is just based on gross revenue for the determination. However you actually post your gross revenue would be appropriate. Now, does it include gross revenue from that's uncollected accounts receivables? The legislation suggests that it does, but that's something that you're going to have to work out specifically with your lender. Hopefully it doesn't have to get to that, but the legislation does not address the difference between accrual and cash.
Okay, thanks.
You bet.
Anybody else? Lena, have a question? Not, we'll keep on going. Thanks.
I may answer some of them as we get further along. So here are the additional uses. Include operational expenses for software, computing, human resources, accounting costs, and supplier costs, which really includes a substantial portion of cost of goods sold that are related to perishables and consumables. So those that when you're actually purchasing those. So these are things that you can now use the PPP funds for in order to be able to get loan forgiveness and personal protective equipment. You can also use PPP funds for property damage caused by civil unrest. And payroll costs is clarified to include full group insurance, including life, disability, health, vision, and or dental insurance. Loans made on or before or after, so before, on, or after enactment of the new legislation can use the expanded forgivable expenses when you're applying for loan forgiveness. So at the time of loan forgiveness, I also wanted to clarify, through all of this, including last year and going into this year, the word application is used in a dual manner. There is the application to apply for PPP loans, funds, and then there is the application to apply for loan forgiveness. There's really two separate applications. One, you apply to get the money, and then you apply to get the loan forgiveness, just as a clarification. And there are some people who returned all or part of their funds and may apply for a second draw up to the $2 million maximum amount. So if they returned their funds, they now have an opportunity to go back in and get money that they returned that they wish they hadn't, as long as they fit the eligibility requirements of the second draw. One change is that prior, people had to maintain their records for 6 years. The new legislation has changed that 4 years for employment and payroll related records and 3 years for all other records. So that's a little bit of a records reduction in records burden on PPP borrowers. Also, we're pleased to see that farmers and ranchers who operate as sole proprietors, independent contractors, self-employed may utilize their gross income from their 2019 Schedule F to help determine the loan amount, as long as they were in business on February 15th, 2020. And we've also learned that farm credit institutions are now going to be allowed to make PPP loans to farmers and ranchers, which we think is a good thing. Seasonal employer is one who operates for not more than 7 months a year and earns no more than 1/3 of its receipts in any 6 months in the prior calendar year is eligible. So I know that many of you out on the peninsula would be considered seasonal employers. And so you've got an increased eligibility here. In the very first round of the PPP, it was based on certain dates in 2019. So this broadens this a little bit, and we think that's good. Housing cooperatives is defined in section 216B of the IRS code, and FCC license holders and newspapers with more than one physical location and no more than 500 employees per location are eligible. And as I'd mentioned before, chambers of commerce, destination marketing organizations are eligible if no more than 15% of their receipts or activities are from lobbying, and the cost of lobbying did not exceed $1 million in the tax year prior to February 15th. So the EIDL advance, this is one of the things that's got a fair amount of concern to it in terms of what's going to happen. And it's here, I'm going to explain to you what I'm learning. But first of all, the new legislation repeals the CARES Act section that required the EIDL deduction on loan forgiveness. So what they've told us just recently is that the SBA is going to provide a reconciliation payment to lenders to pay down the outstanding PPP loan balance that may have been caused by the EIDL advance. If their reduction in loan forgiveness was caused by something else, they're not going to pay that. But for those that may already have applied for and gotten loan forgiveness and discovered that the EIDL advance that they received was tongue-tied here, was removed from the loan forgiveness. That's going to be reversed because the legislation specifically says that the SBA has to make EIDL advance grant awardees made whole without regard to whether those borrowers were eligible for forgiveness. So those actually are turning into a true grant, whereas before, if you had both the EIDL advance and the PPP, you would not have had that be a grant. It would have been reduced from your PPP and converted into a PPP loan. So Congress has reversed that. Good thing. But then there's the EIDL. The number 5 big change is that it was before that you were not going to be allowed to deduct expenses from your tax return, your year-end tax return that had been spent and then with funds that were forgiven. That has been reversed, and they've described it now in a couple of ways to, I think, make it complete. But gross income does not include any amount that would otherwise arise from the forgiveness of a loan, and tax deductions are allowed for otherwise deductible expenses paid with the proceeds of a loan that is forgiven. So they kind of describe it in 2 ways. We really think that this is going to make it easier for the UCPAs and hopefully then give you the opportunity to continue to work on the other things without trying to have to struggle with this one. So our understanding is that from a tax standpoint, you would continue to handle your taxes in the same way that you would have in terms of allowable expenses that you would have prior to the PPP program. Business income does not include forgiveness, though, of certain loans. And again, this is the same thing that we were just talking about, including the emergency EIDL grants and certain loan repayment assistance, such as provided in the CARES Act. But you should know that state-issued grants and local community grants are still going to be treated, as we understand it, as income. So this, the ability to not include income is related to federal money that you might have received, not state money. And these are retroactive, which, as I mentioned before, there's a couple clauses in the legislation that identifies that a good portion of all of this is retroactive. So some additional details. A PPP borrower may elect a covered period that is different than before. Previously, it was restricted to either 8 or 24 weeks. Now it's any actual time frame within a 24-week period, since everybody going forward now is going to be 24 weeks. And if you were 8 weeks, you probably should have had your loan forgiveness being processed already. But the loan amount, as I mentioned before, is 2.5 times the monthly average payroll. Monthly average payroll in 1 year. And it's 3.5 times for those with the NAICS code 72. And seasonal employers that I described, remember, we're talking about two things. One is eligibility for the loan to start with, and the second is determining loan forgiveness. But the loan amount for seasonal employers on a 12-week period between February 19th and February 15th, 2020. And there's a specific definition for the seasonal businesses, which I described before. Businesses with multiple locations are eligible if they employ 300 or less total employees per location relative to the second draw. It's still 500 employees relative to a first draw. Most of the, not all, but most of the requirements for the first draw of a PPP loan is the same as the last year's requirements and conditions. But for all PPP loans, you have to submit, that's not true, not for all, but for the second draw, you have to submit certification attesting to 25% revenue reduction on an annual basis in any one of the 4 quarters, as I described earlier, as compared to 2019. Documents are required at the time of application for loans over 150,000. So if you're getting one that's over 150,000, you're going to have to provide documents directly to your lender, but they are not required at the time of application for those 150,000 and over. Those will be determined and required to be submitted at the time of loan forgiveness.
I was on my email.
So elements that I mentioned before, specifically for underserved and low-income communities. The SBA administrator is required to issue guidance addressing the barriers to access for underserved communities and low-income communities. They do have a $15 billion set aside for loans to be issued by community financial institutions, community development financial institutions, and minority deposit institutions. I'd mentioned that earlier. The SBA portals for those lenders opened up this week, and we are told that they are already in the process of working with members of their communities to be able to process the new PPP loans. There is a set aside of another $15 billion for certain other small depository institutions. We're not sure exactly what they mean by that, but we think that there's going to be some new rules. We don't yet have a time when everybody can apply with their common lender for the new PPP loans. The intent of the legislation was to allow a first shot from these minority and underserved communities. There is a $35 billion set aside for those who are first-time borrowers, $15 billion which are smaller first-time borrowers with 10 or fewer employees, and 25 for second draw loans for smaller borrowers with 10 or fewer employees and loans less than 250,000 in the designated low-income areas, which I'd mentioned before. They have not given us a straight definition on that. There's also 25 million for minority business development centers and 57 million specifically for microloan programs. Those that already have SBA 7A, 504 and microloans, as before, they are going to start in February, paying those again for an additional 3 months. The legislation does say that there are certain underserved businesses that may receive additional months, but the payments on these are going to be capped at $9,000. Loan payments above that will be the responsibility of the borrower. For those that that aren't making it, that are maybe in bankruptcy already, there is a special provision that established that's going to be established in requirement by the SBA administrator that certain small business debtors in bankruptcy will be eligible for the PPP loan, but it does require court approval for the loans for those debtors. If anybody's in business, there's more that's in bankruptcy. There is more information on that for anybody that actually needs it. And now here's a biggie for those of you that have venues that have been shuttered. 15 billion is going to be set aside in grants, but there's real conditions relative to this. There is a webinar tomorrow, Thursday at noon, where we're having training on this. So we should learn a lot more about it then, but it's available to the live venue operators, theatrical producers, performing arts, museums, motion picture, and even talent representatives who demonstrate a revenue reduction. But the priority is like this. In the first 15 days, once this program opens, grants are awarded to venues with a minimum of 90% revenue loss. The second 14 days, it's 70% revenue loss. But after 28 days, grants can be awarded to venues with less than 70% revenue loss. Initial grant can be up to 10 million with a supplemental at 50% of the first grant. So somebody gets one, a grant, and then once it can apply for a second one, the legislation is requiring that the application process allow for that. And there's a $2 billion set aside specifically for entities with up to 50 full-time employees. But here's the hitch, and this is something that those with shuttered venues are going to have to carefully navigate. If they apply for and receive the shuttered venues grant, they are not eligible for a new PPP loan. So you've got to figure out relative to the timing of the opening for the PPP and the timing of the opening for the shuttered venue grant, which one you're going to apply for and what you think the benefit of each is relative to your particular situation. Our general belief is that for those that have really been shuttered, that are venues that have been shuttered, we think it's probably going to be a better deal to apply for the grant. But in all of these programs, there's a limited amount of funds. So we're going to have to see how that goes. As of this moment, we don't, for those generally looking for PPP new loans and shuttered venue, you don't have the ability to apply as of today. So that's new information that we'll see coming out in the next, probably 10 days or as we go along.
So Steve, do you know if the shuttered venue grant is going to be based on payroll? Or do you have I know they've got the webinar tomorrow. I guess we'll all just have to wait and see what
Correct.
They come out.
I don't have that yet.
But it is up to 10 million. So presumably we send out an email to all of the shuttered venue owners in our county to make them aware of this. And then also, so we'll make sure they get a follow-up for that invite.
You know, through these trainings, Colleen, as you know, we're doing this presentation almost on a daily basis right now. And we're going to have the new application forms attached to this slide deck by sometime tomorrow. But relative to this shuttered venues, there's a lot of those here in Washington, and we're hoping that through these trainings, we're going to get into that portal as quickly as possible with many of our shuttered venues to see how we can see if we can't get our Washington state fair share of that money. One of the things that's come up a lot is the allowance in the legislation for the new targeted idle advance. It's no longer based upon number of employees, but it's going to be targeted to entities and low-income communities. And specifically, the legislation says that it's going to be entities that received idle advances that were not the full $10,000. So somebody who received a $1,000 idle advance and is also in the designated low-income community should be eligible to get that amount raised to the full $10,000. And it's also going to be for eligible applicants in low-income communities that did not secure grants, but tried to because the funding had run out. What this means is the way I'm reading the legislation, is that there isn't going to be a portal to apply for the new idle advance. My understanding, and I don't know that for sure, but that's my understanding at this point, that they are going to reach out with the money, the $20 billion that's available, to everybody that's already in the database of the Office of Disaster Assistance who process the idle advances. And they are at first going to reach out to all of those. And if they are already in their database and did not get the $10,000 and are in a low income community, they would be sent the $10,000. And all of those who are in a low income community and received an idle advance, but it wasn't the full 10,000, will get those. What they're going to do after they have delivered all of those funds with the remaining money, we just don't know. But we're pretty confident right now that that's going to be their first attempt, is those who are already in the database of the Office of Disaster Assistance, which is the element of the SBA that processed all of the idle loans. And this process for these and the use of this $20 billion, it goes through December 31st or until the money runs out. And as I had mentioned, the process for that and the designation of low-income communities are still being worked out. One option for those who aren't eligible for the new PPP, either the first or second draw, can apply for this earned retention tax credit. This is an IRS rule, so this is one of the areas we've had to cross-reference, especially for those of you small businesses that didn't get or don't think you can get the PPP. This is a good option for you. And in the second draw, it can be used for wages that are not forgiven with PPP proceeds. So you can get a PPP and still get this, but you can't use it for the same payroll, essentially. Additional eligibility for full or partial reduction in business as may, missing a Y, result of government orders. The Ertc credit is a reduction in the amount due on 941, 940 reports. You know, you're supposed to make deposits on those, which are credit towards year-end tax reporting. Requires a year-over-year gross revenue decline of 20%, not 25. Establishes a credit limit of 10,000 per employee per quarter. This did exist in 2020, but it was 10,000 per employee per year. Now it's per quarter, and it allows businesses with 500 or fewer employees to advance the credit based on wages paid in the same quarter in a previous year. And additional information and rules on this are going to be established by the IRS. I'm going to give you a link to that here in a minute. Most current information. So first priority lenders, as I'd mentioned, are the community financial institutions, community development financial institutions, CDCs, and micro lenders and minority depository institutions. And those are opening up this week. Second priority lenders are those additional lenders willing to process PPP loans relative to this new legislation. One of the things that we are trying to collect right now is a list of those lenders willing to participate in this second, the 2020 PPP loans. Not all of the 5,500 that did it in 2020 are going to be willing to do it in 2021. So as you may learn of lenders who are or are not, reaching out to the SBA with that information would be really helpful. The lender match on the SBA website is going to assist. It has been redesigned at this point to provide a priority for this first priority, the community financial institutions. And they are going to announce, but they have not yet, when everybody else is going to be able to apply for these PPP loans. You do have to work with an approved SBA lender. This is not, the PPP is not something that is handled through the SBA like the EIDL loans are. So there's a real difference in the PPP and the EIDL in that regard. We will provide updated information as this comes available. So the EIDL itself, the program for the EIDL loan has been reauthorized through the end of this year or until funds are no longer available. You need to know that it is a loan. And the interest rates are 3.75 for profit and 2.75 for nonprofit on a 30-year term. Payments are deferred until 12 months after funding, and there is no prepayment penalty, which is a good thing. For those of you who feel like this is a good option, and I'm talking to more and more businesses because of the continued impact of this, the pandemic and the recession, there are more businesses who are thinking about applying for this. If you are, I would get in sooner than later because we think there was only about 100 billion left in this program. We want you to apply here. You want to print each application page to verify for accuracy before moving to the next so that you have a record of it. Validate your deposit institution's routing number. One of the things that we've learned, and I heard yesterday, is that there are many who the information that they have provided in the EIDL process, and this is true for the state grants too, the funding of the WW3, Working Washington 3 round, the delay in a lot of the funding that's come out of that is because people entered wrong information in their bank routing number. So you've got to validate that stuff for both the EIDL and state and other grants coming out. And sometimes the routing number is different based upon the bank's location. Larger banks have got more of those. Smaller banks may only have one, but you've got to verify it. Office of Disaster Assistance, if you want to follow up on the status of it, is at this 800 number. When you do, we've learned that you ask for a tier 2 person. They are the ones that actually have the ability to look at the status of a loan, but they are not ones who can either work with you if you've had it denied or work with you if you are requesting an increase. If you want to do either of those things, you have to go to this email. So again, if you want to reapply based upon a denial, or you want to include the possibility of an increase, go back at it again. You may be required to recomplete the 3501, which is the primary EIDL application, provide a statement of liabilities and an updated 4506T to identify who all of the true owners of the business are and have access to their tax returns. These are not personally secured loans, but they are secured through a UCC filing on the business assets. Upcoming training webinars for those of you that want to continue. We will have this webinar with a complete January 15th on this coming Friday at 10 o'clock. Here is the link to join that. We believe that we'll have copies of the new loan application forms to go over with you. A week from this coming Friday, we're going to cover loan forgiveness in greater detail. And then we're going to do this every Friday at 10 a.m. well into March. And it's going to be 1 week is the application and the next week is a loan forgiveness. So feel free to stay updated on that. As the links for these come out, you can get to them at the WSBDCecenter.com. This is the link for those of you that are interested in joining us tomorrow on the training program for the Shuttered Venue Grant. And we are also doing, those of you that are connected with Weed Up, we're doing specialized training for technical assistance to partners and economic development associations every Tuesday at 10 a.m., but we're doing a first one of these tomorrow morning, Thursday at 10 a.m. So we're going over this material a lot, and every single time we do it, we're including additional updates. Where to get additional information? Technical assistance for non-English speakers. This can be found through this link from the Washington State Department of Commerce. They've got several technical assistance people that we're trying to train on all of this who are maybe bilingual, who might be able to help you. One-on-one SBDC advising is available with us. We don't have full language translation services, but we will certainly do our best to refer you to those if it doesn't apply to one of our 35 advisors around the state. Also, the SBA website, you should know, can be converted into 108 languages with the translate button that they offer, which is fabulous. Here is the link to the lender match program that I described earlier. The Treasury website for PPP rules is here for those of you that want to do the study of the two interim rules that have come out. One is 82 pages, the other is 42 pages. But the information and updates on the employee retention tax credit that I just described, here's the link to that. So we're trying to get everybody as up to date and educated on this stuff as it comes out. Or you can just tap into our webinars and we'll do the best to try and deliver the most updated information. Wanted to let you know that we have 35 advisors now located in 25 locations around the state, including we now have one in Ellensburg in addition here, and one in Coopville in Island County. And we believe we're adding one down on the Columbia River in Skamania, Klickitat counties. So we're here to help you. My colleagues in putting all of this together with the SBA, Mark Costello and Janie Sacco, you'll have their contact information here. You can also reach out to them with any of this information. All right, that's the end of that. Colleen, do we have some questions that we can tackle here in the next 15?
Yeah, I'm sure we do. So I just want everybody to know that we will upload this slide deck onto our website, Choose Column First, right after this meeting. Steve's going to email it off to me. And so then you'll be able to get those clickable links and you can download it onto your computer. So does anyone have any questions? That was lots and lots of data. If you do, you can either put it in the chat or go ahead and unmute yourself now and let's talk about it.
Colleen, I have a question.
Yes.
For the employee retention tax credit, do we know if the 20% reduction of gross revenue is for one quarter when comparing one quarter, or do we have to look at the whole year? Do we know that yet?
My understanding is it's the whole year. I'm not a CPA, as I'd mentioned, or a tax professional, but my understanding from reading the IRS rules so far is that it is a year basis, because that's the documentation that they have, right? The year-over-year tax returns.
But if you had a P&L that showed like second quarter, you had a 50% drop compared to second quarter of 2019, that the way I read it seems like that met the criteria. Why would they even bring it up if it was just only year over year?
Well, keep in mind, there's two separate things here. What you're referring to is the requirement relative to the PPP loans.
Yeah.
But what Lena was talking about is the employee retention tax credit, which is handled by the IRS.
Okay, got it.
Mm-hmm.
Jason, do you have anything you want to share?
Yeah, I have one question for Steve, and then I can share some information. So I have a client that's a shuttered venue, and they're just a little confused if they work with a bank or they go directly to the SBA because it's a grant and not really a loan.
So I can answer that. All of the shuttered venue grants, when they have a portal open, are going to be handled by the Office of Disaster Assistance, which is the same office that's handling the EIDL loans. So they are preparing a separate application process of some sort that's going to be handled by the Office of Disaster Assistance. Having said that, here's one of the challenges that I see happening. the SBA, if you get the SBA updates on a regular basis, at the bottom of those, the generalized SBA newsletters always says that they are hiring. There are a limited number of SBA operators who are trained and capable to handle processing of the EIDL loan, one way or another, processing of the new EIDL advance to low income and underserved communities that are already in their database, and this shuttered venue, and all of the loan forgiveness applications that get sent from a lender to the SBA. It's really all the same people, and they're moving them around to those various assignments. So it's my expectation that some of this is going to go slowly just based upon their capability.
Okay, Mary, you had a question?
Yes, I got my PPP as a new business because in 2019, anyway, in the first round, there was a calculation if you were a new business to calculate your loan amounts. And is there an updated calculation for new businesses in the second round?
There isn't, but the information should apply. If you were in business on or before February 15th, you can include, say, the fourth quarter of 2019, and I believe that you can also include information from the first 6 weeks of 2020. So I would encourage you to apply for the second draw when that comes out. Your lender should have a little bit more specific information at that point in time in terms of how their portal receives your application. Keep in mind that very few lenders, if any, are actually going to have you fill out a paper form to apply for the second draw and hand it in to them. Almost all of them have some sort of an application portal where you go and enter the information online. The legislation requires it to be identical in the way in which the application looks for both the applying for the loan and applying for loan forgiveness. But very few are going to have you do it on a paper form. So when you get to that portal, please make sure that you work with your lender, go to that portal. My understanding is that lenders really want to get this money out to particularly those in underserved communities. And so I would encourage you to see exactly how your lender's portal is handling your documentation. But my belief is you will be eligible. The question is how much.
Okay, so Juanita had a question. She did her loan forgiveness on the 3508S for under $50,000, and where you did not have to retain the FTE. So is that going to be the same case for this second draw PPP?
The legislation says that you will either have to not have not have reduced it by more than 25% in either employees or wages. And we believe that condition is going to apply. But what we also believe is that you're going to just fill out that certification on a short form, very much like the one that she's referring to on the 3508S. We don't know if that's going to exclude people from loan forgiveness for those that are under 150,000. I believe that we're going to get an interim final rule. We've had no interim final rules on loan forgiveness for 2021 yet. Another one of the things that we are not clear on is for those that have not yet filed for loan forgiveness from last year, they wind up getting a second draw. Are they going to be able to combine both of those on loan forgiveness in 2021 in one loan forgiveness attempt? But then what happens if both loans are over 150,000? How's that going to be treated? So here are some details we just don't have the final on yet, but I know that the legislation is really encouraging people to increase the capability of their getting loan forgiveness. So I think that there will be some allowances in the interim final rules when we get them.
Okay, thanks. I know Jason had a few more things he wanted to share from First Federal.
Yeah.
Sure. Thank you, Colleen. So I'm just trying to get a pulse out there of what other banks are doing with the second draw PPP. You know, if I were to guess, I would say that 90% plus will participate, but there are some that are not. I've heard of a couple banks that are choosing to not participate for whatever reason. And then there are certain ones that are just not, that are excluding certain customers. I had one that was a special asset credit at a different bank, and they chose to not allow this person to apply for the second draw PPP, which is really unfortunate. I mean, it's a zero risk loan to the banks. So, you know, we're out, we're active. We're going to have a link available to our website, on our website today, and you can apply directly through that through our website at First Federal Bank. And then anybody who's, you know, more than welcome to reach out to me if they have additional questions, and I can put my contact in the chat.
Great. Thanks, Jason.
Jason, I wanted to back that up. I agree with you on what you just said. We don't know all of the lenders that are or not going to participate, but we have heard that those who choose not to, it's as much as a staffing issue for many of them relative to being able to process these in an effective way, because kind of like the SBA Office of Disaster Assistance, some of these banks have a limited number of people who can work on this. And in 2020, discovered that they were so overwhelmed with these things that they really didn't do a good job of handling them. So our hope is that the way in which they're rolling this out with the CFIs first, community financial institutions, and then moving into the larger lenders, that it will encourage more to apply. And so I agree. Thank you for that input. Appreciate it.
Okay, so Colleen has a question. Will there be any presentations, or is there specific information handouts regarding the application process, how it'll work for self-employed and independent contractors, specifically small businesses with independent contractors, for example, real estate?
Well, you've got to keep in mind that the legislation in the first PPP, and while it addresses that in the second, it does not make changes. The reality is that an independent contractor is a separate business in the eyes of the federal government. And they have their own UBI and an EIN number, and independent contractors are eligible to apply for a PPP themselves. And the same is true with sole proprietors, solopreneurs and such. You're all eligible to apply. It's the basis on which they identify what you're eligible for the most part, is established by your Schedule C, which is still the case as far as we know. So if you're an employer who has independent contractors, you cannot include them as part of your payroll. And that is still the case from what we understand. Yeah, and it's really quite easy for independent contractors and sole proprietors, because you can use all of the funds as essentially payroll, which is what they're calling owner compensation replacement, which if you do the math, it's up to $100,000. So divide that by 12, multiply it by 2.5, it's up to $20,833 or 30, yeah. And so you just got to cut yourself a check from your business account to your personal account within the time period, and that should suffice. Correct. Very good. Thank you. Yep. So yeah, Jason's email is in there. Do you know, Steve, if there are banks right now, credit unions right now that have the PPP loan open, that if someone's really worried or had problems with the PPP loan process with the bank they're working with? I know some locally couldn't get in with Wells Fargo as an example. Does NDC or Coastal Community Bank, are they opening? I know they can apply right now, but are they actually processing loans right now locally? Yeah, most of these who are new lenders to the PPP are establishing their systems and their staffing to be able to handle this. Somebody just said that Sound Community Bank is doing it. I think you're right. I heard yesterday from Chuck DePew that the NDC is opening up this week, either today or tomorrow, to process loans. How quickly that processing is going to happen and people can actually get money in their hands, I can't say. I will tell you, though, that for all of these new PPP loans, one of the things that has shown up in the interim final rule is that lenders are not going to provide an SBA loan number right up front. They're going to look at additional processing because the legislation is requiring them to make sure that they guard against fraud. So they're going to look at these prior to providing an SBA loan number and processing the actual loans.
Okay. Great.
With that, I've got a hard stop here, Colleen. If there's one other question, I'd be happy to try and make a stab at it.
I think we're pretty good. Yeah, I don't see anything else. So Steve, thank you so much for joining us. I'm going to stay on a little bit longer, and I'm also going to put into the chat here the link to our website that has all these, where you'll see this this presentation and all these different links and more information on everything. So Steve, thank you very much for joining us. Really, really appreciate your time and your expertise.
You bet. I just fired off that slide deck to you, Colleen, so you should have that.
Okay, thank you.
Thanks. Everybody.
So I know that was really dense information, and I think what's important to know is not only is Mike Rieckhoff available to us locally, but also your local lender like Jason, if you've done a PPP loan through First Fed, he's certainly available to help. But we also have Rick Dickinson and Micah Jonet. And guys, if you'll put your emails into the chat box, hello, that would really help, so that they're funded also through the SBA, and they're from the Center for Inclusive Entrepreneurship, and they focus on really small businesses, 5 and fewer employees, and if Mike gets really overloaded with people asking for help or you can't get through your bank, Micah's put his information in there. And I see that Rick has also, so he's available. This is what they do, full-time work, it's no cost to you. So, and the other thing I want to say is, once they get the EIDL grant process going, if we are considered a low-income community, make sure you apply for that, because that is the easiest darn grant in the world, and it's going to be $10,000. So I want to, we want to make a really big push for especially our small businesses to get those. Of course, the PPP process is more complex, but it's also a lot more money. And we're doing a special program trying to reach out to the shuttered venue operators, sending specific emails to those bunches. And I'll be really curious to know, or like wineries, say Harbinger Winery that has, the big venue, are they going to be qualified as a shuttered venue operator? Will Field Arts and Events Hall be, we're waiting to find these things out. And if what we learn, we will pass along to those specific businesses. But just know all of these partners are here available as resources for you. So Mike or Rick or Micah, you guys want to add anything?
I guess what I would add is, please apply for this money. If you don't feel like, even if your business doesn't absolutely need it, if you can do it just to get money into Clallam County, bring money into this economy, it's just, it will lift all boats, and it's out there. So I encourage you to go for it.
So Mary, you had a question about negotiating EIDL increases. I assume you're talking about a loan, and I would tell you, contact Mike Rieckhoff, who, Mike,
Yeah.
Did you put your info in the chat box?
My email's in there, and I'll put my phone number in there as well so that people can get a hold of me.
Okay, terrific. And I will, right now I'll put in the chat where exactly which link it is that we will have that PowerPoint. I know that was really a dense PowerPoint, so that you can get right to it. And I will have it up here as soon as I get off of this. I will load it on there for everyone. But this right here is the link to where we will put the slides from this webinar. So you'll have all those active links from his presentation. And so let's see the big things. Yeah, just get ready, get all those documents ready for your business so that you're ready to go, and this can be a bit of an easier process for you. Yep. So anybody have any last minute questions?
I just want to say that I will be with any like non-standard situations such as treaty rights fishing and everything like that. Come to me. I'll be trying to simplify all that mess as much as I can. So if you're the first person to ask me that question, you'll just be helping the next 10 people that ask. So.
Mm-hmm. So, and these guys, you know, they've got a really deep background as CPAs, accountants, that kind of thing. And they they're getting fed the same kind of information that Steve Burke is provided, but he's the one who's presenting across the state. But yeah, they really they've done tons of trainings on this. So not all the answers are out there yet, but they're going to research them for you and help you out. So
I'd also want to add that contact any one of us, and if we're not the right one to help you, we will get you to the right person. So get a hold of any one of us.
Yep.
Yes, there's no wrong door.
Yeah, this is a really critical time because I'm hoping that there won't be the mad rush where they run out of PPP money, but you know, having this ready, and if we are designated as a low income community, which I anticipate we will be, we are a hub zone, which is one of the federal ways they look at things, and also our metrics for household median income, that kind of thing. We are designated at the federal level as our entire county is considered low income. So I'm very hopeful that we get that designation, but they may do it by even down to census tract, census block. And then if that's the case, we'll have a map and you'll have to identify if your business is in the right location, or maybe it'll be based on where you live. I don't know, but as soon as we find that information out, then we're gonna do a huge push for everybody to get these EIDL grants. And as I understand it, they're gonna look back at who applied last time. And I think, did you guys understand that would be automatic?
Yes, for the EIDL advance portion. Yeah, they're gonna make, if you didn't get the full 10,000, they'll make that whole. And if you applied and there was no money, they'll reach out to you as well.
So what if that's only for low income communities? How do you identify yourself as, hey, I'm in a low income community?
Well, I think they'll be using the application demographic information they have to see who falls into those communities that finally get defined. Yeah.
Okay. Maybe it'll be based on zip code. Who knows?
That would certainly be the easiest way to do it.
Mm-hmm. So we'll let everyone know. We'll get that information out. But, you know, I'm not a big fan of reading dense emails, but we'll try to keep it as short as possible. And we have over 10,000 folks that get our emails in Clallam County. So just, you know, tell people to be reading them because it's worth a lot of money at this point. Don't just delete or put it in spam. Okay, I saw Randy Johnson was on. Randy, do you want to add anything? Or Brian Koo?
No, just encourage folks to apply, reach out to that ecosystem that was identified. So Jefferson folks, you know how to get a hold of the EDC, hopefully, and we'll get you connected. But like Rick said, get this money into our region.
Yep. Okay. Well, thanks everybody. Really appreciate it. All right. Reve for First Federal, when will the EIDL grant be backed out of the PPP? I don't know if Jason's still on, but that I believe that will just happen automatically. And I don't know if that's something that the borrower will have to take action on. Yeah, so if you have friends on Facebook or whatever that are also business owners, please share that they ought to be going after this, and we ought to be reposting this information to get it out as broadly as possible.
Colleen, what I found out from Sound Community on the EIDL advance that was deducted when we got the PPP loan forgiveness, that they will automatically submit it for us and send us a notification when they receive the payment so that I can take it off the accounting.
That's great. Yeah, I was expecting it to be an automatic process for people that had already applied for loan forgiveness. So that's terrific news. Okay, well, thanks everyone. Really appreciate you joining us today. Next week, we are having, Josh Weiss on, who's going to talk about the legislative session and how things are going. The state has been talking about $100 million of additional funding on grants. I don't know how that process will roll out, whether it'll be a Working Washington 4 or not. Oh, and for people that applied for a Working Washington 3 grant, they're making those payments now in batches. The first batch went out last week, and they hope to have everybody paid off within the next week or two. But so that was, anyway, they've done 3,000 payments so far of the 12,500, and they had a total of, I think, 5,000, no, I don't remember the number, but they hope to have that done very shortly here. So I've been getting lots of emails from folks saying I haven't been paid, but it should be within the next 5 to 10 days anyway, at the outset. Okay, let's see. Our PPP, US Bank, it looks like EIDL is now being forgiven. First payment was due. Oh, great. Good. Good to hear. Okay, well, thanks everyone. Really appreciate you. Oh, the other thing next week Josh is going to cover is how the unemployment insurance is going. There's a big effort to try to have the state use some of their rainy day fund to fill the UI trust fund with rainy day funds so that people's UI rates won't go up as substantially as they have. Business owners have probably been notified that their unemployment rates have gone up to like 4 or 5, 6%, and they're hoping that that gets lowered for everyone based on moving some rainy day funds into that trust account. So that's one of the things Josh will cover next Wednesday. All right, well, I'm going to call it a day. Thanks, everybody. Really appreciate you joining us. Have a wonderful day.
Thanks, Colleen.
Thanks, Rick. Hey, Micah, can you stay on?